Hello, dear friend, dear lovers, dear followers of this learning platform. We welcome you on this YouTube channel. My name is Benone Ivuguruzwa. My qualification am a ULA CBE BS Accounting Level 4 learner. I'm also currently a student of Institute of Certified Public Accountant of Rwanda with intermediate level. So you can contact us, you can contact me on these addresses appearing on this video. So on this platform, on this learning and training platform, you're going to get more knowledge, more skills, more competencies about business courses. Today, our subject we are going to talk about is auditing. But the session today, we are going to look about two background and introduction to auditing part 1. The main topic on this are background and introduction of auditing. We're going to see assurance. We're going to see types of assurance. We're going to see inherent limitation of an audit. Specifically, we see auditing, need for audit, and assurance services. And also we are going to see objective of an audit, limitation of an audit, need for regulation. Lastly, on this session we are going to see stages or methodology or steps of an auditing. Dear friend, dear lovers, dear followers of this platform, let me start on the background and introduction to auditing. Not only today, but also in many years ago, the stakeholders of many businesses or the financial intermediaries such as banks, insurance companies, venture capital, private equity firm, mutual funds, individual investors, means those who provide funds to new or current viable business idea are on the top to need the audit and assurance services to become aware of the following questions. Not only those provide funds to the new business idea or to the current business idea, but also other stakeholders such as suppliers, customers, government agents are need the confidential information about some entities operate in certain jurisdictions. So those stakeholders are willing to know about some examples of the question, are willing to know their answers. For example, the shareholders of the business are willing to know how will a business perform to increase values of various stakeholders. So the investors, shareholders are willing to know if the return on the investment made on the business will be higher, will be more than the cost of capital of that fund invested in that business. The second question, what is the credit risk involved in lending a certain amount of money to this firm. As I stated above, the financial intermediaries such as banks, insurance companies, venture capital, private equity firm, mutual fund, individual investors, those provide the funds to the new or current viable businesses are willing to know the credit risk, are willing to know if they lend money to the willing borrower and the entity will pay back the money borrowed with their interest timely. So the other stakeholders are willing to know how well the firm managing its liquidity and solvency. So the stakeholders such as shareholders or managers, employees are willing to know if the current asset of the business is more than current liabilities or not, and if the fixed asset of the firm are more than the long-term liabilities of the firm or not. Another question is, what is the firm's business risk? So every stakeholders of any company, of any businesses, are willing to know any factor which can cause the business not to attain its objectives. What is the additional risk created by the firm financing and dividend policies? So the solutions of those questions minded or taught by various financial intermediaries is provided by information intermediaries. Dear friend, dear viewers, dear followers of this learning and training platform, when we say information intermediaries, we really mean an auditing firm, financial analyst who carries out audit and assurance services. So now let me discuss about the assurance. Dear friend, dear believers, assurance in other meaning means a self-confidence, but in our subject of auditing has their own language. So assurance in auditing as their language means offering opinion about specific information, so the users of that information are able to make a confident decisions, knowing that the risk of the information being incorrect is reduced. So no one can give that opinion, and the other or the users, depending on that opinion other given on certain information, and reduce the chance of to be incorrect. Those are the auditing firm. So assurance services. So assurance services are independent professional services, improve the quality of the information, and can be performed by CPAs or by various other professionals. Those are assurance services, are independent professional services. When we say independent professional services, are services provided by the CPAs, but those CPAs or those professionals are not influenced by others or are not have any threat on independence. So the CPAs provide those services, those independent, those professional services, in order to improve the quality of the information. The stakeholders are need the quality information, the information which is relevant, the information which is faithful presentation, information which is timeliness, information which is verifiable, comparable, understandability are offering by the CPAs to the intended users. So the attestation services. Attestation services is assurance services where CPAs report on the reliability of an assertion of financial statement that is made by the another party. Attestation services, for example, audit engagement or review engagement are the attestation services because CPAs certify the public accountant, report on the reliability, report on the draft of the affirmation, of the assertion, of the element of the financial statement that is made by the another parties. So examples of attestation services are audit on historical financial statements. So the audit on historical financial statements really mean audit engagement or external audit. The second one are review on financial statement, review engagement. Those are examples of the attestation services. Attestation services is an assurance services, is a service of offering opinion about a specific information, so the users of that information are able to make a confident decision knowing that the risk of that information being incorrect is reduced, and those provide those services are report give his opinion about those information about the findings on the reliability of the assertions of financial statement. So we are going to see other assurance services. So other assurance services, dear friend, are services not meet the definition of the assurance services. Most of the other assurance services that the CPAs provide do not meet the former definition of the attestation services. The CPAs is not required to issue a written report, where in the assurance services the professional who provide those attestation services are required to issue a written report. But in other assurance services, the assurance does not have to be about the reliability of another party's assertion about the compliance with specified criteria. The other assurance services, for example, when the CPAs are going to do accounting services to the any entities, or are going to make tax declaration of any entities, so those CPAs does not have to be about the reliability of another party's assertion about the compliance with the specified criteria. For example, asset risk assess risks of accumulation, distribution, and the storage of digital information are some examples of other assurance services that CPAs can perform, but is not required to issue a written report. Means he is not required to give his or her findings on a report. So assurance engagement. So as you have stated above, the assurance I have said as the offering opinion about specific information in order to increase the degree of confidence. So the engagement in other means a contract. So assurance engagement may be taught as a contract of offering opinion about specific information in order to increase the degree of confidences of the intended users. So assurance engagement, an engagement is an engagement in which a practitioner, so when you say a practitioner, we really mean someone who practices and a profession. So assurance engagement is an engagement in which a practitioner expresses a conclusion designed to enhance the degree of confidence of the intended users other than a responsible party about the outcome of the evaluation or measurement of subject matter against the criteria. Dear friend, let me analyze over this definition. So this definition contains 5 aspects or elements. In another word, you call it 5 elements of assurance engagement. So the first elements are a 3-party relationship. In our definition, there is a 3-party which have a relationship. The first one are the practitioner. The second are the intended users. The third are the responsible parties. Those parties are seen on the definition of the assurance engagement. Let me explain one by one for this 3-party relationship. So the practitioner are someone who practices a professional. For example, a person who learned a professional of treating a patient is called a doctor. This is in medicine field. Another example, a person who learned a profession of music is called a magician. So in our field of auditing, the practitioner are auditor or financial analyst, mainly are the reviewers of the information. So the professional accountant who are in accounting practices such as auditors are practitioner in this field of auditing to provide his or her independent opinion about the information provided by the responsible parties to the intended users. So the intended users, dear friend, the intended users of that audited financial information are the all stakeholders, are the users of the subject matter. The subject matter are a statement of financial position, a statement of profit and loss account, and the cash flow statement. So the responsible parties stated in this definition of assurance engagement is a party which has the responsibility to prepare the financial statement. So the responsible party are the preparer of the information and the management of the entity. The management of the entity are employees of the entity who have responsibility to prepare the financial statement. So the second element of this definition are the subject matter. So the subject matter are those matters which is prepared by the responsible parties, by the management, and those matter which are also going to be audited or reviewed by the practitioner or by the auditing firm or by the financial analyst. So the subject matter are a set of financial statements evaluated, such as statement of financial position, statement of profit and loss, and the cash flow statement. So the practitioner are examining the subject matter prepared by the management with some benchmarks, based on some benchmarks. Those benchmarks are also suitable criteria. The suitable criteria are benchmarks used to evaluate or to measure the subject matters. Dear friends, so they are the management, the responsible party, are preparer of the information, and the practitioner I also come to see if those information prepared by the management, prepared by the responsible parties, are conform to suitable criteria. Those suitable criteria are the IFRS information financial reporting standard, information accounting standard, company law, general accounting, general acceptable accounting principles. The fourth element are sufficient appropriate evidence to establish an opinion. So the practitioner, after examining the information prepared by the management and are going to give the opinions to the shareholders, may be based on sufficient appropriate evidence to establish opinion. So those evidences may indicate if on his opinions are going to give it to the shareholders the financial information prepared by the management are containing material misstatement or not. So these evidences may be in the form of notes. So notes taken in the discussion with management or third party confirmation. A result from the calculation, an auditor may take some copies of financial information that management prepared and recalculate to gain the accuracy of that information. So those results of the recalculation are one of the form of evidence. So the evidence also may be in the form of original copies. So a letter of representation. So a letter of the representation and a letter the management give it to auditors according to the wishes of the auditors, specifying or indicating how the management do their works. So copies of financial statement and vouchers, those are evidences practitioner or auditing firm may go draft a business and get copy of statement of financial position, copies of statement of profit and loss account, copies of purchase invoice. So those are evidences. So my notes of meeting. the 5 elements are a written report. So after the practitioner examining the information prepared by the management, may give his opinions in the form of a report. So a report to the shareholders. So those report may be a qualified report and the qualified report. So those reports are going to be discussed in more detail in later sessions. So we are going also to discuss about the levels and steps of assurance engagement. So when we say levels, kinds, steps of assurance engagement, we really mean the same things. Dear friend, dear viewers, dear followers of this learning and training platform, we really have 3 levels of assurance engagement, but the mainly levels of assurance engagement are 2. So those 3 levels of engagement, we have reasonable assurance, we have limited assurance, and absolute assurance. So the mainly 2 levels of assurance are the reasonable assurance, which is also called positive assurance, that is provided by audit engagement, and the second one are the negative assurance, which is also called limited assurance, that is provided by review engagement. So we are going to differentiate these levels of assurance. So as I stated above, you have seen that assurance as offering opinions about specific information to increase the degree of confidence of that information. So the levels of assurance, when we say the levels of assurance, the assurance, the degree of confidence is provided to the intended users of that information may be the same, means it may be higher. An auditor or practitioner may give a higher degree of confidences to intended users about the financial information prepared by the management, or provide a lower degree of confidence to information prepared by management to the intended users. So this is why we are going to explain clearly the difference between reasonable assurance and the limited assurance. So in order to differentiate this, we are going to base on these factors. So the first factors are the levels. We are going which assurance reasonable assurance given to the intended users, work effort, evidences, opinions, and expression of an opinion. So when we base it on the levels, in reasonable assurance provide a higher level of assurance, but not absolute level of assurance is like external auditors. But in negative assurance or limited assurance, practitioner or auditor provide lower level of assurance than for an audit. So in reasonable assurance, An auditor may give 95% saying that the information prepared by the management are true and are show true and fair view. But in limited assurance, the practitioner may give assurance at, for example, 55% saying that financial information prepared by the management are showing true and fair view. So the levels, the reasonable assurance, the practitioner give higher level of assurance, but not absolute level. When you say absolute level, the practitioner can't say that they can't give a degree of confidence of 100%, stating that financial information prepared by the management are showing true and fair view. So assurance with acceptable probable margin errors, those are reasonable assurance. And reasonable assurance are assurance with acceptable or probable margin error, but are not 100%. So when you take it to work effort, so practitioner who work audit engagement, their work is different from the work performed by practitioner who work review engagement. So in reasonable assurance, the auditor relies on more heavily both procedures in order to get evidences, in order to understand the businesses, in order to know assertions about the element of a financial statement, in order to get knowledge about the control of the businesses are performed in the reasonable assurance. General inquiries. So in reasonable assurance, the auditors may ask questions to managers or at the third party in order to get information. Analytical may make financial analysis, and substantive procedures may test if the element contained in the financial statement are true, are accurate. Test of control. So in reasonable assurance, the auditor may if the control exists in the business or not, or if the control in the business is working effectively. Substantive test of control. But work effort in review engagement, the auditor relies more heavy on the procedures such as the general inquiries and analytical review. Dear friend, dear followers of this learning and training platform, we see that work effort in a reasonable assurance is more than work effort done in review engagement. So that's why the levels of assurance given in limited assurance are lower compared to the levels of assurance provided in reasonable assurance. So on evidence in reasonable assurance, a practitioner gets sufficient appropriate evidence to be able to draw reasonable conclusion. Dear friends, dear followers, dear believers over this learning and the training platform, in order To draw reasonable conclusion, you must have sufficient, a good enough, more much evidences. You must be work. You must done many works in order to get evidences to be able to draw reasonable conclusions. So, but in negative assurance, a practitioner gathers sufficient appropriate evidence to be able to draw a limited conclusion. So, in this limited assurance, the evidences are not much. If you compare to the evidences in audit engagement, because the worker effort are lower and lower. So go to the opinion. Practitioner confirm that subject matter conform to criteria simply. In reasonable assurance, the audit firm provide his opinion stating that subject matter conform to criteria. A practitioner stated that subject matter, as stated, statement of financial position, statement of profit and loss account, cash flow statement, are prepared in accordance with the International Accounting Standard, International Financial Reporting Standard, company laws, and general accepted accounting principles. So this means the practitioner stated that account gives true and fair view, having regard to accounting standard and law such as carried out in an audit. But opinion that a practitioner who exercise review engagement provide opinion saying that no reason to believe that subject matter does not conform to criteria. So he stated that no reason to believe that the subject matter does not conform to criteria because those reasons are not founded. He does not make more effort to search those reasons. That's why he said that no reason to believe that the subject matter does not conform to criteria, or the practitioner confirms that nothing has come to his attention. Why nothing? Why nothing has come to his attention? Because he does not work many weeks to create those attention, which indicates that the subject matter contain material misstatements. So, expressing an opinion. So, a practitioner should give a positive expression of his opinion, but in reasonable assurance. But in negative assurance, a practitioner should give a negative expression of his conclusion, where an auditor gives opinion as no evidence has not received enough or sufficient or much evidence to give a positive expression of his opinion. So the practitioner, in reasonable assurance, the practitioner should give a positive expression of his conclusion. This does not mean that the report should not be modified. Dear friend and dear brothers, the modified of an opinion may be modified because of disagreement, or be modified because of the limitation. So a practitioner should give a positive expression of his conclusion, but it does not mean that the report should not be modified. It means the accountant should be able to draw a conclusion on the basis of the evidence gained. Do you understand? Do you catch anything on this? the accountant should be able to draw conclusion on the basis of the evidence gained. But by why in negative assurance or limited assurance give expression in a negative form is because the accountant in practice can't draw a conclusion basis on the evidence gained, because he gained lower few evidences. So for example of review of the account and the system of a target company in the event of prospective business purchase are examples of the review engagement. Dear buddies, dear viewers, this is the two main levels of assurance. So those third one are absolute assurance. So the absolute assurance can never be given. Right? In external audit, the absolute assurance can never be given, because there are inherent limitations of an audit that affect the auditor's ability to detect all material misstatement in a state of financial statement. Dear believers, the absolute assurance can be given even the practitioner are going to examine a small or a few subjects where the practitioner will not require to make samples in examining those subject matter or those items, but where the practitioner are going to examine more items, where he will use sampling techniques in order to gain evidences, can never give absolute assurance. So the absolute assurance is to state that the 100% the subject matter conform to criteria. 100% assurance, or where there is no chance of error, is where a practitioner can give absolute assurance, but can't be given. So dear beloveds, dear friends, dear followers of this learning and training platform, to be channel, we are going to end this session today here. Tomorrow we will also continue on this part, introduction and the background of auditing. But today there's inherent limitation which could affect the auditor's ability to detect material misstatement in a set of financial statement and other topics we are not discussed on this session today. So dear beloveds, don't leave on this video without make a subscribe. Please, I beg you to subscribe on this YouTube channel, on this learning, on this training platform, in order to get more knowledge, more skills, more competencies. Dear friend, do not leave without your comment. Your comment is a valuable asset for us in order to improve what we are going to give you, which will help you in your life. Thank you. Stay safe. Stay with God. God bless you.